Four, three, two, one. Welcome to the Capital Gains Tax Solutions podcast, also streamed on Expert CRE Secrets, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is an amazing way for you to exit highly appreciated crypto, business, real estate, save a failing 1031 exchange, so you can create and preserve more wealth or help your clients, friends, and family do the same. Hey, I'm your host, Brett Swartz, and each episode I'm joined by some of the best real estate, financial, wealth, and leadership minds in the world, where they share their ideas, deal stories, and inspirations. Together, we can make complex tax deferral strategies simple and passive income plans achievable. I am excited about our next guest. She is out of Ann Arbor, Michigan, and she is passionate about helping you and her friends, family, and clients create and preserve more wealth in real estate. And we're going to be talking about the magic of getting the deed, maybe some creative financing options. Please welcome to the show with me, Terry Penny. Terry, how you doing?
Hi, Brent. I'm doing good.
And for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Well, I've been in real estate for 30 years. I'm an investor, full-time investor. I'm also a realtor. I help new investors. I've been teaching real estate strategies since 2001. Just everything real estate.
Excellent. And, I believe we've all been given certain gifts in this life, Terry, and the gifts have been given us to be a blessing, help to others. So maybe go back to the earlier days, right? What maybe one or two gifts or strengths do you believe you were given, and how does that help how you help and bless people today?
Well, when we first started, my husband and I made a great team. He passed away a couple of years ago, so I'm on my own now, but we built our careers in real estate, and we made a great team. I realize not all married couples can work together in that capacity, but we made it work, and I think it brought us closer together.
Excellent. So having a great husband and being a good team member, I think that's fantastic. And you have a vast, great background in real estate, and I want to dive into the topic at hand, which is creative financing and figuring out ways to get the deed or get the deal done. Maybe is a better even to think about it. But let's just start out, Sarah. What's the number one secret for getting the deed or getting the deal done?
Well, subject to the magic of getting the deed basically is a real estate strategy. Some investors know how to do this, some don't. It is a little bit of an advanced strategy, but it's an excellent way to be able to take a deal down that has no equity or somehow wouldn't normally fit into a deal that most investors are looking for. The ideal scenario would be someone in maybe a distressed situation, not necessarily the property is in a distressed condition. It might be someone where the house is upside down, meaning they owe more on it than it's worth. So what are you going to do with that, right? I mean, they can't sell, they can't afford to sell. They may have just bought the property and their job might be moving them out of state. They don't want to be a landlord, right? Some people have heard all the horror stories. Or someone that may have just lost their good paying job right after they bought this beautiful house, maybe a year ago. They can't afford it anymore. They've already fallen behind on some payments. So basically, as an investor, you come in, you want to solve problems. And this is a problem. People don't want to risk their credit by having a foreclosure on their record, or, they want to preserve their credit. They don't want to be a landlord. So as an investor, you can come in and offer to purchase the property subject to. So that's a phrase that a lot of investors have heard of, subject to. It's a strategy, but they don't really understand what it means. So subject to, if you understand, contingent upon. So basically you're saying, I will buy your house subject to the mortgage staying in place, or contingent upon the mortgage staying in place. So this allows the seller to move on. And then as an investor, you're coming in, you will get the deed because you're buying the property. The difference is the mortgage will stay in the seller's name. You essentially just take over their payments. So this could be beneficial to someone that doesn't want to ruin their credit. Now you have to come in as a professional real estate investor, right? I mean, your reputation and the trust factor is huge here because the mortgage is in their name. They're depending on you to make those payments for them. So as an investor, obviously you have to analyze it properly to see, make sure it'll be a good deal for you. But many times as an investor, your only option would be to hold that property as a rental, because now you're in the same position. They might not have any equity, might owe on more than it's worth. You hold it as a rental long enough, eventually there'll be equity, there's cash flow. It's not such a bad deal for the investor.
Okay, so this is also kind of known as a wrap, where essentially the seller is going to say, "Hey, either I can't afford it, or I want to sell it, but there could be some actually decent interest on. Maybe it's a lower interest rate they got it about a year and a half ago versus interest being where they're at now, and they're saying, hey, don't assume my debt because there might be a due on assumption clause, right, where the bank would say, well, now all the no notes due, so we're going to just wrap it where the buyer is going to purchase the property and then just continue to make the payments on behalf of would it be themselves or would it be on behalf of the previous seller? Or explain that part of it.
So a wraparound mortgages kind of consist of two mortgages existing, the original mortgage and then a new mortgage, which would wrap around there. I've never done a wraparound mortgage, but I've heard of them. I'm not sure if the deed transfers at that point. A land contract is also an option, but then again, there's two payments being made, there's different interest rates and so forth. This, if the seller is on board and they trust you, and this is a much cleaner way to do it. There's essentially a deed over to you, and then you're taking over the payments. Now, there is a due on sale clause on every mortgage, and you always take that risk of the mortgage company calling that mortgage due and payable because there was a sale. It's not the end of the world if that happens, but to stay under the radar where most payments are made electronically right now. They're not monitoring where those payments are coming from. Okay. So you don't want to be in a position where the seller is forced to pay off that mortgage. If that does come up, there's no due on sale police, right? They're not regularly doing title searches to see.
Got it. So what's the risk for the buyer then? So the buyer gets the property, right? But, continues to make the payments. Do they have any, risk that the seller may come back and,
well,
say
no,
something, do something, or what?
There's your typical purchase agreement, which spells everything out. And then you've got disclosures. The disclosures make it very, very clear of what's happening, what they're agreeing to, and they're, on board with everything. So that will prevent them from coming back and saying, I didn't agree to this.
Got it. And then the risk for the seller is that the buyer doesn't continue to make the payments, and ultimately the seller's credit is shot. Is that correct?
Right, which probably would have happened anyways, but that's what I'm saying with this. Something like this, you're staying in the deal, and your credibility means everything. You want to do what you say you're going to do. You want to continue to make those payments. Okay.
What's the next secret about getting the deed or creative financing that you'd like to share?
Well, creative financing can be interesting. A lot of investors struggle with how to get financing for some of their deals, and there's some things that they overlook. You've heard of OPM, right? Or other people's monies. There's other investors that are willing to invest into certain deals, or a joint venture agreement. Might be a family member that might have some money laying around. People, they can use their HELOC on their primary residence if they have equity available. If they have equity in their rental properties, they can refinance out of that. VA financing has some excellent rates if anyone's a veteran. I always tell people as an investor, if you're a veteran, look for a 2 to 4 unit and do a house hack, right? Because you can, up to 4 units, you can get VA financing and live in one unit and rent the other units out as an investment property. Hard money is always, that's how we started exclusively. But the hard money lenders will lend most of what you need, but you still have down payment and points and closing costs and so forth. And some new investors may not have that cash needed to bring to the closing table. A gap partner works real well with that, where you might only need 10 or 20,000. You can get the hard money loan, but you need the funds for the down payment, the payments, closing costs and points and so forth. Again, a gap partner can fill in the gap and bring that little bit of cash to the table. And basically you partner on it. Credit cards could also be your gap partner. If you've got some good credit cards, you can do cash advances. They got heavy fees behind them. But again, VA, if you're a veteran, I mean, Penn Fed, Navy Federal, and USAA have some excellent credit card programs too. So you might be able to pull cash off of those to fill the gap of what you need if you're going with a hard money loan. Seller financing, like lease options and land contracts, are always good for the investor. It could be a win-win situation. You're paying the seller interest. So they'll end up netting more than they normally would. And self-directed IRAs, sometimes life insurance policies you can borrow from. So there's a lot of different ways to pull some cash for real estate investing.
Excellent. How does creative financing become more valuable in today's increasing interest rate environment?
I tell everyone these interest rates really aren't bad right now. I know they're going up, but I remember from the 90s when they were in double digits and we were still buying in real estate and we were renting and we made it work. You had a little less cash flow on the rental properties, but it didn't shut us down. We were still doing business. Seller financing is great. Most lease options, land contracts right now, at least in this area, are around 7%. So that's not that much higher than your traditional rates. A lot of times less qualifying, the seller, everything's negotiable. The down payment, the interest rate, the term, it's all negotiable.
What do you say to the seller who's like, hey, Terry, I want to sell it at this capital gains tax. I'm going to do this land contract with you. And the buyer's like, sure. But the buyer, 2 to 3, 4 years from then, they're just going to pay them. They're going to pay the tax anyways. What's kind of the counter to that? Because on the one hand, the seller wants to defer the tax, capital gains tax. On the other hand, the buyer wants to refinance and or pull money back out once they improve the property. So how do you try to bridge that gap between the seller and the buyer?
Mostly in contracts come with a balloon payment, 3 years, 5 years, 10 years. It has to be paid off within that time. You could, if the capital gains tax is an issue for the seller, you could definitely stipulate in the land contract that it can't be paid off before a certain time.
But what if they want it for longer than a certain time? And by the way, what's the average land contract? Is it 3 to 5 years? Is it 10 years? What's the balloon payment coming due? What do you typically see?
It's almost always amortized over 30 years, but the balloon is negotiable between the buyer and the seller. But mostly what I've seen is 3 or 5 years.
Right. That's part of why part of why we like the deferred sales trust here is because we like to say it's an installment sale or even a land contract on steroids, and that it doesn't have to be 3 to 5 years. It can be for 10, 20, 30, 40, 50 years. In 10-year increments, you don't go longer than 10, but every 10 years you can renew for 10, and you're not tied to that buyer wanting to refi and pay you off. In fact, the collateral is completely separated. So what would that do for a seller who wants long-term, deferral and not just the 3 to 5 years?
Well, you could definitely do that. There's some land contracts that go the entire term, 20 years. They don't have a balloon payment. They're not required to pay it off early at any time. The seller, if you look at an amortization schedule for a mortgage, you see how heavy the interest is on the front end of the mortgage. And so most of the payment goes to interest and less to principal. That's all going into the seller's pocket because the seller is acting as the bank. So that's why the banks have the largest buildings, right? Because they're getting this interest for hundreds and thousands of the customers. So the seller can act as the bank and they collect all those interest payments. And it really could be a win-win situation, because then the buyer doesn't have that stress of refinancing or qualifying for the refinance, or having that balloon coming up due, and for whatever reason they can't refinance. They don't have that burden. And the seller, if they don't need all the cash to be cashed out right away, they can continue to collect those interest payments.
Got it. Excellent. So let's shift a little bit into the biggest frustration with the 1031 exchange. It's a question we ask every guest, and the question goes like this: like, Terry, what's the biggest frustration you've had, or client or friend or family, when it comes to the 1031 exchange?
The concept is great, right? We all know that. Setting it up is a little, takes some professional setup to make sure that it's going to match, right? And that you can, it qualifies. I've got people looking for properties right now that they did a 1031 tax exchange, and they've got this money they have to spend and they can't find a decent property. But I think it's an excellent strategy to defer the taxes.
Have you ever had someone like run out of time, or have somebody, the seller wouldn't deal? Like, I mean, they identified and they're ready to close, but the lender wouldn't lend, or what? Any like, oh no, nightmare stories for that?
Always. It's almost always drama when you get closer to the closing table, isn't it? Yeah, it's, some deals go much smoother than others, but for the most part, if you've got professional people working on the deal, we find a solution.
Absolutely. That's so true, right? Hire the who, don't be the how, and make sure you get great brokers and great team, great qualified intermediary. If you do run out of time, by the way, we do have something called a deferred sales trust. It can help you to save a failing 1031 exchange past your 45th day, past about 181 is the latest we can do it. And so if you're interested in learning more about that, you go to capitalgainstaxsolutions.com to make sure that you have a backup plan. That being said, Terry, are you ready for the lightning round?
Yes.
All right. Knowing what you know now, Terry, if you go back to your 20-year-old self, what's the one golden nugget you'd make sure to tell yourself to do?
Plan for the future. Yeah. If have a plan. We were just accumulating a lot of properties and not really having a plan. Well, I take that back. Our plan, just to give you an idea, and I tell people this too, because they need some direction sometimes. So back in the 90s, when we first got started, my husband worked for a maximum security psychiatric prison. Okay. And it was driving him, every day it was so much stress. And so our goal was to get him, away from his job. So we did put a plan together, and that was that if we could accumulate enough rental properties and the positive cash flow collectively made up for his job, he could quit his job, and then we'd be living off the income from the properties. And that's exactly what we did. And we used a hard money lender in order to accomplish that. And then we were doing the BRRRR method before it was a thing, right? Buy, rehab, rent, refinance, repeat. So because he had a good job with the prison, we were able to refinance these and all. So we accumulated a lot of properties pretty quickly, some rental properties, and then he was able to quit his job. What we weren't doing back then was planning even further than that, for retirement, for, adding more, flipping some, getting big hits of cash as we needed them, things like that. But there's so many different things that you can do in real estate that the possibilities are so extensive that you can go in so many different directions, and everybody's goals are different. Not everybody wants to be a landlord, right? That's
good. Second question, number one book you recommended or gifted the most in the past year?
Actually, what I'm diving into right now that I think is excellent is a book that I just got called Becoming Your Own Banker. It's Unlock the Infinite Banking Concept. That's something new that I'm learning about, and I'm very intrigued by this concept.
Excellent. Question number 3, what are you most curious about right now?
The upcoming market. I'm predicting buyer's market is coming back, which we haven't seen in a long time. The interest rates are going to start leveling things out a little bit. So I'm curious about what's coming up pretty soon.
Excellent. Second to last question. What's the number one leadership quote or theme that you strive to live by?
I would do what I need to do when I need to do I'm sorry, let me start over. I will do what I need to do when I need to do it. No debate.
Excellent. Last question, Terry. After all your success, helping all the people you've helped, how do you stay centered with the habit you practice to stay centered in your values and stay encouraged to charge forward to reach new heights?
I remind myself and others all the time that your reputation in this business is everything. And real estate, especially local real estate investors, they can be cowboys. They can be out there. And when you start doing bad business, your name will get around as having a bad reputation. And then, good luck, but if people are in this for the long haul, I know they're veterans in the business. I know the ones that have been around here for a while. Those are the ones that are doing business professionally and not, they're trying to help people and find solutions for people. So those are the people I appreciate the most.
Excellent. Terry, it's been a pleasure to have you on the show. And I want to encourage you to keep using the gifts and talents to help people create and preserve more wealth in real estate. Be creative with financing, finding deals, getting deals done. For our listeners who want to get in touch with you, what's the best place for them to find you?
You can go to my website. It's terrypenny.com, TERRYPENNY.com. I have everything that I do is listed on there. Real estate. I do mentorships and I have some ebooks and things. So I do a little bit of everything, but mainly real estate's my bread and butter.
Amazing. Thanks, Terry, for being on the show. I also want to thank our listeners for listening to that episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the deferred sales trust, or maybe in a creative financing strategy to get things done like with Terry Penny is an amazing way to create and preserve more wealth. We also thank our listeners on Expert CRE Secrets for checking us out as well. And we encourage everyone to rate, review, subscribe. Go to capitalgainstaxsolutions.com if you want to get started on your deferred sales trust. Also, check out the new book that's coming soon, Building a Tax Deferred Exit Strategy. And check out our mastermind. It happens every Friday. It's no cost, complimentary, every Friday, 10 a.m. Pacific Standard Time, 1 p.m. Eastern, where we're talking about real estate. We're talking about tax deferral strategies, talking about the deferred sales trust. So you can check that out by going to capitalgainstaxsolutions.com. Thanks, everyone.